Welcome to Fresh Start, our podcast on debt management and financial wellness. Here are your hosts, Lionel and Stacy.
Hello, everybody. My name is Lionel, aka Smitty, and she is attorney Stacy, aka Hoppy. Welcome to Fresh Start. Today's topic: trying to figure out if you're over your head in debt. What are the signs that you may be over your head in debt?
The first sign is that you come to the realization that you just don't have enough money to pay your creditors. And you start looking for places that you can get money to pay your creditors.
And most times, what do people look for?
Generally, by the time a client has come to see me, they will have got money from retirement loans or via retirement loans.
401k.
That is the first one I see.
Okay.
And that is just a bad idea for a multitude of reasons. First being, retirement is for that, retirement.
Right.
You shouldn't be invading that retirement account for any reason. I mean, granted, there are emergencies perhaps, and paying debt, in my opinion, I don't see that as an emergency.
But it's easy though. If I'm having money problems and I can just go to work and point and click on my computer and get this money, it's very private. No one knows. They deduct the payments from my check. But the reality is I've picked up another debt.
And again, you're invading your retirement account.
Right.
And I see clients who are in retirement who have chosen to do this. And now that you have a fixed income that you are reducing by taking money out, you're just setting yourself up for a hard time going forward. And it doesn't eliminate the debt. You still have debt that you have to pay. Yep. Also, in terms of a loan, It means that you're paying it back.
Right.
So each pay period, there's an amount of money coming out of your paycheck that is going to pay back that loan, which means your take-home pay is now less.
And the worst part is that most times these loans are payroll deducted. So it's coming out of your funds before you even get your check. And secondly, most employers don't allow you to continue to contribute to your 401k while you have a loan. So if you have a loan that takes you 3 years to pay back, that's 3 years of you not contributing to your 401k.
To your retirement. So that definitely is not the place you want to go. You want to talk to someone before you decide to take that route.
Right.
Maybe in your case, it might make sense. Right. You may have one debt that you need to pay, and that loan eliminates that debt. Right. That might make sense for you, but most people aren't in that situation. Most people have multiple debts that they need to service, and that loan typically isn't enough to service all those debts.
Another thing I see that's quite often to the clients that come in to see us is that they then go, if let's say they don't have a 401k or access to it, or they've already tapped that, and they can't get any more. What I've seen is going to family and friends and borrowing money there. And while that is, again, if you have family and friends who look out for you or you guys look out for each other, that may be a good thing. Mm-hmm. But if you are already unable to pay the debts that you have, you risk ruining those relationships, because now if you agree with your friend and family, say, hey, loan me $1,000 and I'm going to pay you $200 every 15th or whatever, and you don't pay that money, then that starts to put a strain on not only you, but that relationship. And that's not something people want to look to, because you don't want to owe your friends money. So if you're in those situations, or if you're thinking about doing any of those things, perhaps you need to talk to a professional, take some time out, come and talk to somebody, see what your options are. Now, one of the other things that I've seen people do that I think is quite dangerous, but I do understand that, when you're in a jam, you're going to do whatever you need to do to not lose your job or whatever, is to take one of these high interest internet loans or a title loan against your vehicle. What are your thoughts on those?
Both of those are very bad ideas. And internet loans, you just said high interest. The interest rate on those loans are just astronomical. And the repayment terms are generally onerous. It's automatically deducted from your bank account. That date that they choose to deduct may not be convenient for you. Or it could be that whatever money you know is deposited in your account each month is never enough to cover your debts anyway. You may have other debts that are being deducted.
Right.
So usually what happens with clients is they end up with their account being overdrawn multiple times. So then you got bank fees. So many things reducing the amount of money you have available to pay creditors.
Right.
So you thought maybe this loan would plug a hole, but it kind of created 5 more.
Right. And the worst thing I think is those random companies that you don't even know
and most of them are random.
Right. Being in your account though. So they can just go in there and debit. And I'm sure in their fine print somewhere, even though you're supposed to pay X amount of dollars on the 15th, if you don't pay, they can come in at any time.
They can continue to debit.
To just debit and run up fees for you. Or you take a title against your vehicle.
Title loans.
Which you already own free and clear. So let's talk about that a bit.
Title loan is if you're considering a title loan or even have a title loan, you really need to talk to someone quickly. Title loans are simply that. It is a lien against your vehicle. That means your title, which you had owned free and clear, now shows a lien holder again as whatever that title company is. So the DMV now has a lien or shows a title with that company as a lien. If you don't pay them, they own your vehicle.
And I think what fools a lot of people is they still have possession of their physical title. They don't understand that once you gave them that VIN number,
title is applied for.
They apply for a new title with their name on it. So now, until you pay back that loan, they own your vehicle.
They own
effectively
that vehicle.
Right.
And a title loan is more akin to a pawn transaction.
Okay.
If you default after 30 days, the title automatically converts to the title pawn company.
So listen to what
title automatically converts.
Listen to what she said. You own your vehicle free and clear. You give them either your physical title or your VIN number where they apply for a new title, and you default. After 30 days, that title now reverts to them. So your vehicle
literally is owned by them. There's nothing they have to do. They don't have to sue you. There's no further action they have to take. Title pawns are extremely, extremely, extremely dangerous.
But here's the thing. Most times you're doing what you have to do. No one is judging you for that. However, instead of keep falling deeper and deeper into a hole, you need to come in, talk to us. The consultations are non-judgmental. It's a nice, calm,
it's private. It's confidential. No one else needs to know that you're coming to see us, but you do need to talk to someone.
Right. We have
3 locations in the metro Atlanta area. As Lionel just said, consultations are always free. The only thing it will cost you is a bit of your time. So please come see us and let us help you get the fresh start that you deserve. Right.
No one deserves to live under pressure from these creditors, the incessant harassing phone calls, letters. Most times they're very rude. So come and see us. So my name is Lionel, a.k.a. Smitty. She's attorney
Stacy,
right,
a.k.a. Hoppy.
And we will see you next week.